Good day, everyone. Well, global unrest accelerates. We've got Putin announcing military mobilization and threatening the use of nuclear weapons. And meanwhile, Europe is facing severe fuel shortages as Russia cuts off natural gas supplies. Then we had the terrorist-induced gas leak of a major supplier. And so naturally, European leaders are worried about social unrest as winter approaches. Of course, this triggers rampant inflation in the EU, along with the euro having broken parity with the dollar. While both the euro and pound hit all-time lows against the dollar, the CME actually had to halt GBP options trading as the pound collapsed earlier this week. And inflation in the EU hit a record high of 9.1%, and that's been driven sharply higher by energy and food prices. And this is likely to head into double digits in subsequent reports. And by the way, this was the highest rate since the euro was created in 1999. So if the Russia-Ukraine conflict drags on through the winter, and it's looking like it will, this could spark a revolution in the EU as many families will be unable to heat their homes. Sentiment is not surprisingly at negative extremes. As we've said, oversold markets are ripe to dead cat bounce. But while this suggests lower lows for stock and crypto markets, don't let the dead bat tag fool you. Such bounces can be sharp as short covering takes hold. And this applies to both the stock and crypto markets. We've seen such sharp rallies during two of the worst bear markets on record. One being the bursting of the dot-com bubble from 2000 to 2002, and then the post-October 1929 crash from 1930 to 1932. So the question becomes when to cover your shorts. We all know that pigs get slaughtered and greed wrecks profits. When you have solid profits in a hurry on the short side, it's often time to cover, and then you keep a close eye as the bounce volume starts to ebb and curl over. Logical points of resistance in major averages and key stocks make for sound to short entry points. The 4-week moving average also serves as a point of resistance. And the NASDAQ composite had rallied up close to its 40-week twice so far this year. And both of these were excellent places to initiate short positions. And you could have done that across the board because all these major averages correlate. So hiking rates, the Fed intends to try to anyway, according to the CME Fed futures, get rates up to 400 to 425 basis points by the end of the year. At least that's what the CME Fed futures is telegraphing. But they were telegraphing 425 to 450 earlier this week. So I think that they're seeing that this chain reaction from the Fed hiking rates and the plunging pound and plunging euro has second-order consequences, and so it might force the Fed's hand to go a little easier on the rate hikes. Hiking rates curbs demand, as we're seeing with real estate and oil. But unfortunately, the primary cause of inflation is on the supply side. Supply-side inflation is soaring due to political uncertainties and crippled supply chains. Western sanctions on Russia are disrupting global supply chains, and many businesses that caught bankruptcies from COVID never reopened, and that further reduces supply. Central bankers believe that hiking rates will always control inflation, but the fundamental problem is a damaged supply side, hit first from COVID, then from the ongoing Russia-Ukraine conflict. Hiking rates is disastrous when it's clear recession is here, despite low unemployment, which is always low just before major recessions. So it's not surprising that central bankers appear quite clueless in all of this. And I guess with things where they are, and we're going to probably see more second order and third order effects from the rise in rates, then I would say expect lower lows and lower highs induced by any short covering rallies in both the major stock market averages and in the cryptocurrency markets. The The problem really is, as we've said, the Fed is really caught, and central banks are caught, and they have inflation, soaring inflation, global record levels of debt, and interest rates that are just unfortunately historically well below average. So they don't have much to work with here. And it looks to me like the question will be how fast Powell's hand is forced to halt the rate hikes. But even then, there's so much unwinding that has to be done from this massive debt bubble that's been created. I mean, in a way, I think it's the mother of all bubbles. So if we look back to prior major bear markets, just because the Fed starts to lower rates doesn't mean that the market's going to find its low. In fact, in the early 30s and then the early 2000s, both of those periods took more than several months. I think it was 18 months in the early 2000s case, and something like 32 months or 28 months in the early 1930s case, from the time the Fed started to lower rates until the market found a major low. So I think we could be in for that kind of situation. I think the only saving grace will be if we get a black swan, and like a COVID type of situation or a 2008 situation, and that just completely forces the Fed's hand to go and turn on the spigot full blast, where they start printing trillions of dollars once again in the form of QE5. And that would be a huge buy signal, but I think the Fed's going to do everything it can to avoid that situation. So I think we could be in for, some, like I said, some lower lows, and major markets basically unraveling to the tune of, say, 50% lower or more on the S&P 500. And that suggests that Bitcoin will have hit probably somewhere around 10,000. Gil, how are you seeing everything?
I think the Bank of England blinked, and it kind of underscores the potential for unintended consequences. They're raising rates over there. They've got raging inflation, so they start raising rates, and that drives down their bond market, but it gets out of control, and the bond market starts to collapse. The currency starts to collapse, and they have to jump in with a Band-Aid. They're saying this is going to be temporary bond buying, but we'll see how that plays out. I think what's going on right now, and you can give me your input on this, but I think with the UK doing that probably forces some European buying in our markets this morning. And we'll see how this plays out, but it's possible once they're done here, we could roll back the other way. I think for the most part, though, the market's in a position where it's very tricky and can go either way. So as Chris was saying, when you have decent profits, you want to take them, but also you'll get cover points, so things that I've been working on the short side or was coming into last week, you get an undercut and rally here on Sun Run, and it rallies from there, Give me a black pen here. So it rallies a little bit, but notice how that would have been Friday, but notice how all it does is run into the 50-day line, and it's shortable again. And that's more like bear market action. So it's possible that if you see something rallying into resistance, it's shortable. The time really to jump on the short side was after the Fed meeting, and that was a very strange day because we had an initial drop right after the Fed announcement, and then we turned off the lows. I actually went long, and then it ran up to higher highs intraday, and then it rolled over again. So essentially double topped out. So I flipped back to the short side, and then we came down for the rest of the week, and we've been coming down and edging lower over the past 3 days. Today we're trying to rally, but you can see how that all worked out. You had the big breakdown after the Fed, and that was a very fluid day because we thought there was a reasonable chance that you could get some kind of a reaction rally after the Fed, but no. Instead, Powell remains aggressive, and during his press conference, and they just bomb the thing. And so we break to lower lows on Thursday and Friday. And in the past 3 days, we've been tracking along this prior June low, which I think is 36.87. So we're trading 36.7906 right now, roughly, and bouncing around. And this could be an undercut and rally position. And technically right now, that's what it's doing because it's rallied back above that 36.87 low. But there's really no thrust here. And today what you have is an exogenous condition because it looked like overnight we were going to get destroyed. I mean, I was long the UVXY overnight, and I'm watching it trade. I got up in the middle of the night to check the quotes, and this thing's up at 1340 or something like that, 1350, and now we were trading down to 1237. So it's reversed on this sudden stream of buying that's come in. But I'm wondering whether this is European buying forced by the UK action, and then once they're done, it tips over again. So it's not like I'm going to jump in and buy in here, because the Fed heads are still all out today on the circuit, being aggressive on inflation, and they're going to continue to be. Kashkari or whatever the guy's name is, he was out yesterday saying that they're going to keep rates up until they know that they've killed inflation and it stays down for a while. So that implies some pretty severe Fed aggression, and that can't be good for stocks. But the question becomes, and I think the UK situation this morning, overnight, kind of points this out, does some sort of systemic breakdown occur that forces them to do something, and then we just get some kind of bizarre QE bounce? And I think that's the danger of playing the short side here if you don't run it very tight. And so I think you're in a position here where there's not much that you can do unless you've already been shorting from the peak when the S&P ran into the 200-day moving average in mid-August and has since come down. So, overall, I don't really see anything I want to do on the long side. There is, the potential, if the UK is starting to do this, then maybe, silver and gold will turn. There's a PSLB, the PHYSO sitting along its prior lows. It's just trying to come up off the bottom. If we look at a weekly chart, there's really nothing here that you could peg as a reference point for an undercut and rally or some other long entry, unless we started to clear some of these moving averages, and that's not happening. So the other thing to remember is that it's the UK, the Bank of England, that is reinstituting or restarting QE with bond purchases, not the Fed. So, there are wrinkles here, and it makes for a very messy market fabric, shall we say. And so I think you're better off kind of hanging back and just letting this play out. It's very difficult to see whether the short side is going to be productive here. I think it would be if you had some sort of a panic collapse, but it's pretty obvious that the UK or the Bank of England's action has put a bid in the market today. We'll see how this plays out, but it'll be very interesting to see how this rally plays out and whether it gives way very quickly or it leads to something more sustained. I tend to think that at best it can lead to a multi-day oversold rally, but we won't know until we see it. All we know is we're up right now, and if you look at the indexes, you're down in along the June lows, so you're in a position where you could have the typical undercut and rally type of move. But we could just fail to lower lows because you're also in a short 3-4 day bear flag. So, it's pretty complicated mess right now, and I don't really see why anybody needs to be messing around too much. If I look at my most recent leaders list, and I think this was a leaders list that I had built during the bear market rally when the S&P ran from the June low up to the 200-day moving average, and if we look at this, what it's doing today, and I'm just going alphabetically, a lot of these names were actually short sale targets a couple of weeks ago. They've come down. They're extended on the downside. It's very easy to see that. And so I just monitor these for potential short sale entries up at moving average resistance, where I see where it runs in. And of course, if I'm going to be very vigilant about my stops. If it pushes through moving average resistance, I'm just gone, because this could push higher from here. And I think it's just kind of very risky, very volatile, and a little bit crazy, And I'm sure you have that sense of things as well, because overnight, after the Apple news last night that they're paring back their iPhone production, things look pretty nasty. So somebody's texting me. Get that out of there. I love all these spam texts. They think you're stupid. They really should also learn proper English syntax, but that's another issue. Anyways, I've been distracted. What am I looking at? Okay, so you see something like CSIQ. It's still below the 50-day line. It could post an undercut and rally. That's a possibility. I say just be fluid here if you want to trade this market. But I think basically what you're doing is you're flipping. You're being flipper here, and you'll go long, go short. Yesterday I flipped 6 times. I started out long on the gap up overnight. I was long, fortunately. Proof that I'd rather be lucky than good, and I got a nice big move on the futures up. Nasdaq futures up 180, 200 before the open. I bailed out of that and then went long the UVXY, and it ran up to 13 and change, and bailed out of that, and then flipped short, and then went long again. And I think at the end of the day, I was long on the fifth flip, and then by the end of the after-hour session, I'd flipped short again, and I was long the UVXY, and it looked beautiful this morning. And then when we opened up, it's spun around, and then really hasn't gone anywhere. My entry is pretty low here. I'm really not too far below it, but we'll see. I'm just holding a small bit here. I don't really have much expectation for it. But that's essentially what's going on. And if I continue through my leaders list, some of these names, are they longs? Are they shorts? Here's Iridium. That's actually a little undercut and rally off the 65-day exponential. So I don't know, if that's a long here. You see the lithium names trying to bounce off the last Friday's lows, but they're not going anywhere. Eli Lilly on a gap up move. Was that related to the Biogen drug, Chris? Do you know?
I'm not sure. I haven't checked.
Oh man, I gotta, this is annoying. It's one of those, you get those texts, it's like, hi John, I saw your house and I wanted to know if you wanted to sell it, blah, blah, blah. It's like, no, moron. I think they're just trying to bait you, right? In any case, same thing here, you get a little undercut and rally this low over here. Okay, that's a cover point for me, okay? Because if you get short on an aggressive move on the double top, trigger through this high or up in here or through the 10-day and then the 20-day, it comes down in here, undercuts that low here, and that's a cover point. So for me, the shorts were covers on Friday. And then sitting around watching what's happening this week, trying to trade the madness intraday, and that's basically it. So, it's a day trader's market, and I'll just trade my day trading account mainly, and there really isn't much else to do when it comes to trend following type stuff. So continue through this list just to give you a sense. McDonald's was a leader, but then it morphed into a late stage failed base about 3 weeks ago. Montauk Renewables is another stock that's been benefiting from all the pork barrel spending on so-called clean energy. But that, you look at that could potentially become a short here at the 20-day line. Here's Grumman right into the 50-day line. ON Semiconductor was a short through the 20-day line last week, and then it bottomed out on Friday. And you'll notice also that it bottomed out on Friday on an undercut and rally. So if you've read Short Selling with the O'Neill Disciples, then you know that is a cover signal. So you cover, you see if it rallies. If it breaks back below, you can re-short it, or you can watch the rally and see if you can short it up higher in the pattern. And that's basically what you're looking at with most of these. And so to me, these were covers. You had a little undercut and rally here and a shakeout at the 200-day line on Peabody Energy. So that was a cover point. Now look at this. You're flashing a potential pocket pivot on a streaking move through the 50-day line. Crazy. Sigma Lithium, this is a stronger lithium name, but notice how it undercut that low of a couple of weeks ago, and now it's hanging along the 20-day line. Steel Dynamics is just down there. Vertex has been a short along the $300 century mark, but notice how it's sputtering down here and trying to push back up to the highs of this little range that it's formed over the last 3 to 4 weeks. And that's basically what you're looking at there. If we look around, say, at semiconductors, and I'll look at the big stocks primarily, you can just see that most of these things are so far down in their patterns. It's like been down for so long, it's starting to look like up to me, right? And so you are getting these little undercut and rally type moves in here that I think they're tradable, but you've been trying to get them for the past couple, 3-4 days, and they really haven't caught traction. So I don't really know, whether these are going to be good for some big trades. I think you can play it, but just keep your stop at the prior low, and that's that. So somebody says, I'm watching SQQQ for MACD to go positive on my 5-minute chart. Okay, so Lilly has an Alzheimer's drug. Okay. BIIB, Biogen, yeah, they got a big, their drug was also big. Is it related to Lilly? It is, isn't it? It has to be. In any case, somebody's looking at the MACD on the, let's see if I can find it. What if I move this guy out of the way? And you can see put call ratio is collapsing here. So that's probably, I got to move a bunch of stuff out of the way. Here we go. So you want to be Why not be long the TQQQ instead? So you're waiting for the SQQQ for a long entry signal, but you're really getting, you had a long entry signal on the TQQQ just above 21. Why wouldn't you just be long that? If you're sitting around waiting for, whoops, too many Qs there. Okay, I guess you can wait for this, but it ain't happening. Why not be long the TQQQ? That's what I'll do. I'll flip them around and mess around with these things that way, but I don't know. This looks, I think you want to be long the TQQQ. So there you go. Anyway, so you can wait for it to go positive, but why not be long the TQQQ? Anyways, so where was I? Let's see, getting back to the semis, just getting chopped up. But some are in positions where you could get rallies. So if you're a swing trader, you might check that out and see if you get some action there. But for the most part, kind of down there, and it's a little bit dicey. Railroads have been just destroyed. Look at Canadian National Railway, and it's got a little undercut and rally going on through this low. So for me, I mean, at most, these are short sale cover signals. Potentially long, swing trades here, but you can go through all the rails, and they're all in these undercut and rally positions. Some of the payment stocks have just been beaten up. But again, you see, global payments way down here in a UNR position. They're punching it. Up 343 now. Wild. Let's see, MasterCard, Paycom, you got possibly, there's a low in here, but you're shaking out at the 200-day line. We'll see if this holds up. I mean, I want to see whether this goes past 8:30. That's when they close up, right, Chris, our time? Anyways, moving along here, let's see, miners. What are miners are moving right now because you've got gold and silver moving on the Bank of England news. So you do have an undercut and rally, kind of a gap up move in Agnico Eagle Mines. And some of these cheaper ones I'm really not. I'm actually going to go to my big stock miners. I mean, you can see some gap up moves, but I don't know if these hold at this point. I mean, I think if you got on them yesterday, or early this morning in pre-open when the Bank of England announced what they were doing, then I think you probably had a chance here. But at this point, they're a little extended, so you have to wait and see whether they set up again. But you can see across the board, you see these little undercut and rally moves, and this could mean that maybe it's time for gold and silver to run. That's a possibility. We know that there have been shortages of silver for some time, but that's really never come to fruition in terms of the prices. So in any case, yeah, they're humping it good. Any other questions? I don't really have a lot to say. There are some things you can look at in terms of undercut and rally moves if you want to trade those. But again, we'll see how this pans out. If it's a one-day wonder rally, it could just fizzle out. And I think you're in a position where there's a lot of volatility and potential to move 5% lower and probably potential to move 5% higher very quickly, depending on how things play out from here. So yeah, that's what I think the bottom line is at this point. So more of a waiting game than anything else, unless you're a very nimble, tactical, short-term, say, day trader type. So anyways, that's all I got. Chris, you got anything to add?
I think we're good over here. Let's just wait to see what unravels next.
Yeah, so could get nasty. In any case, that's it for now, everyone. Thanks for showing up. We'll talk to you later. Have a great rest of your trading week, and probably going to remain crazy.
So long, everyone.